This is David Russell, Global Head of Market Strategy for TradeStation. And today we'll look at major events for investors and traders. Stocks are breaking out to new highs as the artificial intelligence boom widens. The S&P 500 rose a little more than 1% in the holiday-shortened week between Friday, January 12th and Friday, January 19th. The index closed at a new all-time high for the first time in over 2 years. Technology companies associated with AI, like Advanced Micro Devices and Super Microcomputer, led the surge. AMD jumped after Barclays cited potential AI growth. The rally widened after Taiwan Semiconductor, the world's biggest chip maker, beat estimates and raised guidance. Super Micro, whose machines power AI server farms, said quarterly revenue was about 28% above previous forecasts. NVIDIA, the world's most valuable semiconductor stock by market cap, also got a boost from Meta Platforms. Mark Zuckerberg, the CEO of Meta, said it's become clearer that the next generation of services will require full general intelligence. He said Meta is building an absolutely massive amount of infrastructure to support the effort, which includes lots of NVIDIA processors. By the way, Meta, the parent of Facebook and Instagram, is getting back close to a $1 trillion market capitalization. Microsoft also continued its move to new record territory after Bank of America cited growth from its AI Copilot service. The software giant widened its edge over Apple, which remains below its previous highs. While technology grabbed the biggest headlines, last week also brought significant positive news on the American economy. Retail sales beat forecasts for the sixth straight month, and initial jobless claims fell more than expected to a 16-month low. That may suggest there's little risk of recession, despite the Federal Reserve's aggressive interest rate hikes. Consumers have confidence that inflation has turned a corner, University of Michigan economist Joe Insoo said on Friday. Combined with stronger confidence in wages, consumer sentiment had its biggest two-month increase since 1991. Residential real estate continued its run of positive news as housing starts, building permits, and builder sentiment beat expectations. Strong demand and lower mortgage costs are fueling the trend. Growth stocks like semiconductors and software dominated last week's move. Communications also climbed as AI optimism lifted Alphabet and Meta. Financials and consumer discretionaries inched higher, but lagged the S&P 500. Interestingly, more members of the index fell last week than rose. 266 were down, and 237 were up, according to TradeStation data. 10 of the S&P 500 second's 11 best performers were chip stocks. Industrial supplier Fastenal was the number 6 gainer after price hikes, and a new on-site business model drove earnings and revenue past forecasts. Selling focused on safe havens like utilities, consumer staples, and gold miners. Energy kept falling as growing oil supplies offset geopolitical risks. Chinese stocks also declined as the Asian country struggles with weak consumer demand, falling home prices, and a shrinking population. Green energy stocks struggled, and Tesla lost value for the fifth straight week. And now let's chart the market. Friday's close was 0.4% above its previous peak and 0.9% above its previous record close. The breakout immediately followed a record weekly closing price on January 12th. The index had spent a few weeks consolidating between 4,700 and 4,800. The Relative Strength Index, or RSI, hit a 3-year high in December, but has retreated from that overbought condition. That may give the index more potential to advance. It bounced at its 21-day exponential moving average during the time. The faster 8-day exponential moving average also remained above the slower 21-day, a potential sign of short-term bullishness. Some traders may think the current situation resembles moments like January 2013 and December 2016. Both times, the index made steady gains after escaping long-term consolidation periods. Apart from the S&P 500, there are few noteworthy chart signals. The dollar index, treasury yields, and crude oil inched higher last week, but have failed to rebound from big slides in late 2023. It could be positive for stocks if they remain under pressure. This week has a lot of earnings and a couple of important economic reports. United Airlines issues results on Monday morning. Netflix, Verizon Communications, and Johnson & Johnson are noteworthy companies tomorrow. Crude oil inventories follow on Wednesday morning. Tesla, AT&T, International Business Machines, and Lam Research report earnings. Thursday brings the government's initial estimate of gross domestic product, or GDP, for the last 3 months of 2023. Initial jobless claims and durable goods orders are also due. The earnings roster includes Intel and American Airlines. Friday's big item is the Personal Consumption Expenditures Inflation Index. Other items include results from American Express and pending home sales. Thanks for watching. Please visit tradestation.com for more.